G'day guys, Nathan here from Hunter Galloway. Our focus today is on the Australian government's recent expansion of the eligibility criteria for 3 of their housing schemes, intended to support more home buyers in their pursuit of home ownership. From the 1st of July, the legislation will allow siblings, friends, and parents with their children in pairs to jointly enter the scheme. Additionally, past owners who haven't owned a property in the last 10 years will also be eligible. On top of that, permanent residents will now be all eligible under the 3 schemes to participate in. As we navigate through each change, it may seem complex, and I'm going to use my extensive knowledge of the Australian housing system to help clarify and update each point and go through some of the predictions as to what might actually occur with these changes. We'll also analyze the potential ramifications of these guarantees, which have gained popularity amongst those striving to purchase a property with deposits as low as 2 to 5%. But along these favorable conditions come with potential risks, which we'll examine in further detail later. Let's start off with the Home Guarantee Scheme. This program has been a godsend for first homeowners across Australia. Essentially, it lets you purchase a home with as little as 5% deposit. You can waive the mortgage insurance, which means you save thousands of dollars in costs, which usually comes with less than a 20% deposit. The government backs you with a guarantee up to 15% of the property's value, meaning, as I said earlier, you only need a 5% deposit. There are a few conditions. You need to have a certain income level, so income can't exceed $125,000. It's based on the previous financial year, and that's for single applicants. If you're purchasing with a partner, then the income restrictions raise and you can't have a combined total income of $200,000. Now, the income is determined by your previous financial year. So if you're applying from the 1st of July, it'll count for your 2023 financial year. So if your income's over 125, as a single person, or 200,000 as a couple, they're the main criteria you need to meet to be eligible for any of these schemes. You also need to live in the property, so it needs to be a property that you intend to live in as an owner-occupier, and there are certain price caps. So depending on where you're located, you cannot exceed a certain price point. So something to keep in mind there. If you do find value in these videos, please consider hitting that subscribe button, as it does really help out the channel. And a big thank you to all our subscribers for your support. Inspires us to create more content we hope you'll enjoy. Now, things are going to get even better come the 1st of July. You won't have to go it alone, and you can apply now with friends, siblings, and other family members. And on top of that, if you're not a first homeowner, no worries. You can also apply if you haven't had a property in the last 10 years. The door's open for permanent residents as well. And just keep in mind, there are other requirements, like I talked earlier, with price caps, income limits. They all remain the same. And these changes are being implemented to help the housing affordability crisis that we're seeing at the moment. Now let's head to the countryside and look at the regional first home guarantee, which is also updating. It's basically exactly like the first home guarantee. Now, to qualify under the regional guarantee, there is a slight twist that you need to be aware of, and that you need to have lived in a regional area or a neighboring area for at least a year before you actually apply for a loan. Now, there's actually not much change with this scheme here. It's keeping in line with the home guarantee scheme. So if you are eyeing a home in a regional area and you meet the criteria, including living in the area or a regional area for 1 year, then you've got a ticket under the regional home guarantee. If you don't quite qualify under that, you can still apply under the home guarantee. So you have some options there, which is really neat. We also have the family home guarantee. This one is a lifesaver for parents and legal guardians of at least one dependent child. You only need to have a 2% deposit, and there's no lender's mortgage insurance. Like the other schemes, the government provides a guarantee up to 18% of the home's value. There are some conditions that apply, which are pretty similar to the other schemes. You do need to be over 18 years old, you can't have earned over $125,000, and you need to intend to be living in the property. So pretty similar to the last 2 schemes we talked about. As of the 1st of July, the home guarantee scheme is expanding to include legal guardians such as aunties, uncles, and grandparents, as well as single parents. Plus, once again, not limited to Australian citizens anymore. It's open to permanent residents like the other 2 schemes. So you can now apply under the scheme from the 1st of July, having greater opportunity to get in the scheme. The other requirements, such as price caps, still apply, but it opens up new possibilities for more people to become homeowners. And here at Hunter Galloway, we're a mortgage broker, and we have lenders on our panel that can get you in this scheme or any of the 3 schemes we've talked about today. Simply reach out with us at Hunter Galloway handygalloway.com.au, fill in a contact form or call us on 1300 088 065 if we can be any of assistance to get you in this scheme and get you ahead. Now let's continue and look at the potential implications of these changes. For one, these modifications aim to stimulate the housing market by enabling more people to enter. The increase in demand could potentially lead to an upturn in property prices, an effect that could be more beneficial to sellers and investors. On the flip side, the scheme's increased accessibility might actually lead to an influx of applications, escalating competition for properties in the short term. Now, the scheme is on a first come, first go basis. For example, on the home guarantee scheme, there's only 35,000 spots. Once the spots are exhausted, that's it until the next financial year. The introduction of joint applications could potentially alleviate the pressures on individuals striving to break into the property markets by sharing the financial burden amongst other people. However, it also can introduce the possibility of financial disputes between co-applicants. Prospective joint applicants must carefully consider the implications and carefully communicate their expectations to avoid this potential conflict. Expanding eligibility to individuals that haven't owned a property in the last decade makes a significant shift. This change broadens the target demographic to include those who haven't previously owned a property and fallen out of the home ownership market due to various circumstances that might be outside of their control. It provides an opportunity for those to re-enter the market, especially having been out of the property ladder for a long period of time. On top of this, the extension of the scheme to allow permanent residents further demonstrates the government's commitment to promoting home ownership across a diverse demographic. This move will likely enhance the diversity of home ownership and will stimulate economic activity through increased property transactions. The expansion of the family home guarantee to include other types of legal guardians and single parents along with permanent residents represents a commendable step towards inclusive housing initiatives. This is an attempt to acknowledge and address the unique challenges these groups face in achieving home ownership. Now, these changes certainly do pose a potential opportunity and challenge to prospective home buyers. It's a double-edged sword where the government aims at easing the path to home ownership whilst potentially inflating prices due to increased demand. Updating these schemes might see that demand increases while supply remains low, which can inevitably lead to price increases. These updates to the housing scheme will undoubtedly be beneficial for many, particularly those who have found it very difficult to enter the property market. The expansion of eligibility criteria and the opportunity for joint applicants are positive changes which make the dream of home ownership more attainable for more Australians. If prices rise without solid economic justification, it could lead to a drop in house prices and it could leave some in a position where they owe more than what their property is worth. It's crucial to remember that the schemes can help make it easier to purchase a property with a lower deposit, but they don't eliminate the need for prudential financial management. Borrowers still need to make sure they're able to meet their repayments, especially if interest rates go up, and working with a broker like ourselves, we can help guide you through these steps and make sure that you're not only right for now, but in the future, and understand what changes and costs might look like with rates going up and ways you can mitigate those risks, such as fixing in your loan. On the flip side, if these schemes were to be withdrawn suddenly, it could see a rapid drop in demand and we could see prices go down as a result. Based on what we understand with the government, this scheme appears to be renewing each financial year, so there's no signs that they're going to stop that anytime soon, but something to keep in mind. Owning a home is still a dream for many and it can be an important step in financial security. It's important to build a strong foundation and save the best deposit you can, maintaining a good credit score, and also know that you don't want to stretch yourself too thin. In terms of the broader market, the government's decision to extend these schemes will likely fuel more demand, but supply needs to keep up with it. The Home Builder Scheme, for example, created a temporary increase in building approvals for detached homes and renovations. Although the scheme has now ended, the rates of building approvals have stayed high, prolonging the average construction time for new homes from 6 to 9 months. This puts additional strain on housing markets and exacerbates affordability issues. And remember to like, share, and subscribe to stay informed with all things property and finance. And we've seen in recent times there's been a shift towards remote working, which has changed living preferences, with less emphasis on proximity to the city and more demand for larger homes. This shift in demand could continue to drive up prices and further complicate housing affordability. On a positive note, the Reserve Bank of Australia predicts that construction of new homes will stay robust in the next few years to come. Coupled with an expected return to pre-pandemic population growth rates by 2024, this could help alleviate pressures on house prices. While these schemes can indeed assist first home buyers, it's crucial to understand the potential effects and broader housing market and approach them with a level head. And this is where working with a mortgage broker like ourselves can help and make sure you're moving in the right financial position. efficient. Guys, here at Hunter Galloway, we help a lot of home buyers secure spots under these schemes. If you're looking at assistance, reach out with us. There's no cost for our service. We work with people Australia-wide, and best of all, we've got a panel of lenders that can help assist with this scheme. Give us a call on 1300 088 065 or visit our website huntergalloway.com.au. As always, guys, thanks for watching, and we'll see you next time.